the world's most valuable manufacturer, made a 32.9% profit margin, more than double that of legacy companies such as General Motors, GM.N, Ford Motor Co., F.N, and Stellantis, all of which have been investing substantially in the lucrative electric vehicle industry. While the margins are remarkable, some are concerned that they have reached their pinnacle, said Julie Gillespie, TipRanks head of market research. The recent price increases are for orders that, in some circumstances, would be fulfilled a year later and may incur increased production expenses, thereby pressuring margins. Tesla has been recording record deliveries and earnings for multiple quarters since the emergence of the COVID-19 epidemic, while competitors have been dealing with global supply chain challenges and have even paused production. As a result, one of the most significant underlying risks to the group's margins is volume loss. While demand has remained strong despite rising costs, affordability will always be a major consideration. I'd be astonished if the margins fell, since they're just getting better and better, said investor Thomas Hayes, managing member of Great Hill Capital LLC, who added that while investment in factories will incur costs, production will grow as well. Even though Tesla's price increases are intended to cover higher projected expenditures in the next 6 to 12 months, rising commodity costs could eat into margins. According to them, margins could be squeezed in the coming months as ramp-up costs at the factories in Berlin and Texas gradually become part of the cost of production and move out of R&D expenses. Despite this, many investors remain optimistic about the company's future, after Chief Executive Elon Musk hinted that volume growth could reach 60% this year, up from 50% forecast in the fourth quarter earnings call. Tesla Inc.'s TSLA.O eye-popping profit margin has Wall Street analysts wondering if the business will be able to maintain it in the face of rising material costs and greater production costs. Tesla's record profit margin, which occurred as a result of increased prices, fueled a roughly 9% increase in the stock price on Thursday, prompting at least 5 analysts to upgrade their price targets, but with caution. This means that production ramp-up would be critical for Tesla. How many cars rattle down the production line ultimately determines its profits, said Laura Hoy, an analyst at Hargreaves Lansdowne.